welcome to the 6th edition of Our Take. I'm Michelle Kessel-Harbart, here with my colleague Ken Brown, and today we're going to do something a little bit different. Today we're going to read from a stack of questions that we received from viewers. So without further ado, Ken, you want to read the first question?
I do indeed. So, getting started here, if I may. This is from Andy in El Dorado Hills. Hi, Andy. Andy works for a larger company in the Sacramento area. I guess I'm going to paraphrase. They've done a round of layoffs. Andy's position wasn't impacted, so that's good news for Andy. However, many of his coworkers haven't been so lucky. Some have been furloughed pending indefinite call-up, and others have been essentially laid off. So Andy's in a management position, and he's wondering, since he's getting calls and he's kind of an influencer there at the company, what these people should be doing, and if he wants to be able to help them. So Michelle, I'm going to let you take this one.
All right. Well, hello, Andy. I'm happy to help. So obviously losing a job unexpectedly is it brings a great sense of fear due to the unknown, and we're here to help. So there's going to be a lot of obstacles that will be put in your path when you have a sudden loss of income. The best thing to have, though, is a plan, right?
Absolutely.
So we've put together a fact sheet, and it's available to anybody who needs some additional information. And the fact sheet will have 7 steps to get you started with that plan. And we're here to help. Everybody's situation is unique. So what to do if you've been laid off? Here's some 7 steps. So the first thing is to assess your financial situation. You really want to take a look at all of your income sources and your expenses and be sure that you have what you need to get by for the next few months. Number 2 is you want to file for unemployment. That your employer has paid into that fund, and right now the federal government until the end of July is providing an additional $600 per month for unemployment benefits. 3, come up with a realistic budget. We can help you in doing that. You want to gather all of your expense information, and we have a great budget gathering tool that's on our website, as well as within the description of this video on our YouTube channel. You want to be sure to include all your healthcare calculations. Make sure that you have accounted for how much your healthcare will cost when you're unemployed, whether that be through COBRA or maybe you've got some type of a severance that includes some healthcare. Consider your options for Social Security. You can download your most recent Social Security statement, and we can help you with that. If you're at an age where you can start to collect Social Security, we can work with you on the best strategy for you based on your age and your financial circumstances at the time. Maybe it's best to file now. Maybe it would still be a good idea to hold on and hold off given your situation. You want to review your options that are available under the CARES Act. There are some really good relief benefits that they've put into that act. We've talked about those in a previous video, and we can work with you on that. And then number 7, how does your current situation affect your financial plan? So long term, what does your financial plan look like based on what's happening right now? You may be surprised. It may not have a huge impact. However, maybe it does, and we're here to help you in assessing that information. Again, you can download from our website, or also in the description field of our YouTube channel, the laid off and near retirement fact sheet for additional information. And again, everybody's situation is unique, but we're here to assist you with a strategy and to help you move forward.
I know we discussed this before, but just to refresh my memory. So in the CARES Act, there were some provisions for borrowing against the 401k.
Right, for borrowing against 401k, as well as borrowing against your IRA. So if your company allows it, you've always had the option to borrow from your 401k, to take a loan out from your 401k.
Right.
But with the CARES Act, you can now actually take a loan from your IRA. You can take up to $100,000 withdrawal from your IRA, and you can have 3 years to repay that. Mm-hmm. If you don't repay it, it's taxable. But if you do repay it, it's tax-free. It's a tax-free loan.
So it could be a nice bridge.
It really can. Yeah, definitely.
Okay.
Definitely.
Well, good.
Yeah.
Good.
Let's see. I'm going to take the next question.
Okay.
Okay. Next question. Amy in Sacramento asks, with interest rates so low, where should she look for current income?
That would be me. My
That
bailiwick.
would be you.
Hi, Amy. Maybe start with what we shouldn't do. We shouldn't stretch for yield. And I know the impulse is there to look for higher yielding securities, whether it's in corporate bonds or junk paper or emerging markets, or mutual funds that invest in such. The risk is that the credit quality is low. These are oftentimes entities that have a higher likelihood of going under and or not paying their debt service. And so we don't want to get caught up in that. We want to maintain high credit quality throughout this period. I mean, it becomes essential. If we're invested in municipal bonds, I definitely want to maintain high credit quality, but we also want to look at the revenue sources. So a revenue source, for example, from a water utility or a bridge district or perhaps an electric utility would be preferable to perhaps a general fund, and certainly preferable to lesser or weaker revenue sources like real estate development or something along these lines. So we're very cognizant of that. In a general sense, we want to keep maturities fairly low because interest rates are at historical low levels. So what that means is we don't want to lock in 1% for 10 years or 15 years when we're likely to see over time interest rates rise modestly. We want to be able to take advantage of those rising interest rates virtually as they occur. So keep the maturities fairly short. I think that we're in a place right now where treasuries don't make an awful lot of sense unless we're trying to use them as leverage in a portfolio. I think CDs relative to treasuries are attractive. The spreads are fairly wide. If, for example, I'll give you an example. If a 10-year treasury is yielding about 0.6%, and you can get a 2-year CD for roughly 1.5%, it's not a great yield, but it's not a bad place as a holding tank. So the bottom line is don't stretch for yield. Be willing to accept a lower level of income right now, and basically look for the opportunity as interest rates begin to come up to roll up and lock in little higher yields as we go along. I guess that's it.
All right. Well, good to know there is at least some opportunity there.
Yeah. One other thought. There are some companies through their common stock that pay dividends that might be approaching 2.5–3% that are really pretty secure. And so maybe part of the income portfolio that used to otherwise be allocated for bonds, we might look at allocating some of those into equities, really just for the income. And then if we get a modicum of growth on top of that, all the better.
All right, great, good stuff.
Mm-hmm.
Good stuff. You want to take the next one?
I get the next one. Okay, here we go.
Go back and forth.
Here we go.
Was that Johnny Carson?
Yeah, I think so. Moving along. Michael in Auburn wants to know how he can access his account online. Michelle,
Okay.
That's definitely you.
I will take that one. Hello, Michael. Accessing your account online is really simple. I'm going to show you some steps here. So there's really just 3 simple steps. You're going to go to our website, avisensecurities.com. Upper right-hand corner, you're going to click Client Login. That's going to bring you to NetX Investor. That is Pershing's platform. From there, you're going to put in your user ID and password along with the correspondent number, which is 70V. And then once you log in, you'll see NetX Investor, and you can look at all of your accounts one at a time or your entire portfolio. And there's some research, some tools, communications. You can see your statements there. You don't have to wait for them in the mail, and that's completely free of charge. So that's a good thing to look at. The other thing I wanted to mention is the ability to look at your financial plan online. And from here, you can actually see what your probability of success is based on current market conditions, using all of the goals that we've discussed with you in our meetings. And so this is a really good indicator to look at in that probability of success. You can see, all right, the market's down X%, but am I still on track to meet my retirement goals and to be able to do what I want to do as far as meet my needs, wants, and wishes? And if you don't have a financial plan, then I encourage you to contact us and let's work together on putting one together for you.
Great.
Let's see. Next question. Sharon from Folsom asks, you mentioned in your video that you can help us determine the best strategy for taking Social Security. What do you need to help us with this? I'll take this one.
That's timely.
Yes. So great question, Sharon. It's really simple. What we are going to need, first of all, would be your Social Security statement. And we're doing quite a few of these lately as people are a little bit concerned. They're nearing retirement and want to know if they should be taking their retirement early. There's also been in the recent news some scare about some deficits in the Social Security trust fund, and
right.
So people are concerned. We understand that, but there's definitely strategies involved on when you should take your Social Security. So the number one thing to do would be download your statement. If you don't have your statement, you're going to want to go to the Social Security Administration website. That's ssa.gov. Go to the right-hand corner, click sign up. Then you're going to go to the next screen and click on My Social Security. From there, you're going to complete some questions if you haven't already done so, and you'll be able to access your statement very quickly. So once we have your Social Security statement, we have some really powerful software that we use that will help us in determining your most optimal strategy. We're going to look at the most optimal strategy based on just simply benefits alone. We're going to look at the earliest possible, and then we're going to look at some different scenarios based on maybe you could wait longer and it would provide you with a larger benefit, but maybe you have some health concerns, and so you may need to take that a little bit sooner to maximize your long-term benefits. So you're eligible to receive your full retirement benefits at your full retirement age, your FRA. That's based on your year of birth. So if you start too early, you're going to be able to get those benefits sooner rather than later, but you're going to be leaving some money on the table, and we'll help you determine if that makes sense for you. And if you start too late, then you're going to get a larger payment per month, but it's going to be over a shorter time span. Now keep in mind that anytime after your full retirement age, you're going to get an additional 8% per year, and that's for the lifetime of your benefits. So that's really important, really something to keep in mind.
Can I ask you something?
Yes.
So if you're earning 8% over there, and you're over age 59, you can draw down your retirement account. Does it make sense in some cases to use your retirement account to draw down while you're waiting for that retirement benefit in your Social Security to accumulate?
It may make sense, and it may also make sense if you had some income available to you in your taxable account as well. So we'll take a look at that.
Okay.
And see what would be the best strategy for you.
So that software runs that.
And that will run that. Yeah,
right,
that
good.
will tell us. And then also what we do is we calculate the break even for your benefits. And this is a useful way to ensure that the balance of your payments versus longevity. So keep a lookout. We're going to do a future video on Social Security analysis and benefits, and where to take a deeper dive into all the factors that go into deciding when to file for your benefits.
Maybe we can use some examples of different age groups and so forth, because it takes into consideration couples and so forth.
Especially varying ages.
Right.
So those are all the questions we wanted to go through right now. We wanted to keep this nice and short. really great questions. By all means, keep sending them over to us.
Absolutely, absolutely. And everybody, take care of yourselves. Stay healthy.
Take care. Bye-bye.